Hello, it's nice to see the Las Cruces Heart Health Clinic crew again. As most of you know, I'm Mike, your financial consultant. A few weeks ago, I sat down with Mrs. Devers, your board president, and Mrs. Cordero, the executive director, to ascertain what you all needed from me. They mentioned that most of you all are first-time board members coming over from the for-profit sector, so there's been some confusion about some nonprofit financial basics. After talking with each board member independently, I've found 3 issues that seem to be causing the most confusion. So let's just go over the agenda for this training. First, I will explain how the numbering system on a chart of accounts is organized and read. Next, I will explain what the statement of activities is and how you can process the information you glean from it. Then finally, I will explain which tax form you need to file with the IRS and then give you an explanation of some of the other ones you may need to file in the future as you grow. Alright, let's get started. Since most of you all are coming from the medical field, I understand that many of you haven't had the opportunity or even the necessity to learn how to read a chart of accounts, and it's probably one of the more intimidating financial statements you'll need because of the number system. So, a chart of accounts is just a way to record and organize the numerous transactions an organization makes to give you a general idea of how effective your organization has been financially. On the chart of accounts, you might see an account with the number 1020 with a bunch of transactions and be left scratching your head wondering what the heck that even means. Believe it or not, there is a method to the madness. The first number on the account tells you broadly what kind of account you're looking at. So in 1020, the 1 typically means that you're looking at an asset account. The second number tells you what category that is. So in this case, the 0 would mean that you're looking at a cash asset. The final 2 digits will tell you the subcategory of the account, so the 20 could represent payroll checking. And according to Harold Abercamp from AccountCoach.com, charts of accounts are usually organized like this here on the screen. There is no mandatory way to organize your accounts, but I would highly recommend you direct your accounting department to use the example here above, since it's very common and easy to follow. And if there are any gaps in your accounts, let's say that you have 1020 but no 1029, that's fine. Smaller organizations rarely need to use every number, but it's good to leave some gaps so you can fill in the new accounts as you grow. So moving on, I want to talk to you about the statement of activities now. Stephen Bragg from AccountingTools.com says a statement of activities quantifies the revenue and expenses of a nonprofit entity for a reporting period. Since many of you are coming from the for-profit sector, you might know this one as a profit and loss statement, and it basically tells you the change in your net assets over a period of time. Some of you might be asking, what does net assets mean? And that just tells you how much money you'd have left if you liquidated all your assets to pay off all your liabilities. In other words, how much money would you have left after paying all the bills? Nonprofits are actually allowed to turn a profit, they just have to invest it back into the organization. So that means that you'll usually want to have a positive net asset. Generally, negative net assets is a bad thing since it means you're spending more than you're making, but there are some cases where that isn't necessarily an issue. If, for example, you were building a new facility or expanding your staff, you might end up spending more than you're making in a given period of time. You just don't want to keep doing that over a long period of time. Now, the last thing that I want to cover is what kind of tax form you'll need to file. Nonprofits file a Form 990, and there are 4 different kinds of them. There's the 990N, sometimes called the e-postcard, and according to the IRS, this one is for organizations with gross receipts of $50,000 or less. And really quick, gross receipts means the total amount of money you all received before expenses are subtracted. The next form is called the 990 Easy, and it's for organizations with more than $50,000 but less than $200,000 in gross receipts and less than $500,000 in assets. And this is the form that you guys will need to file. As you continue to grow though, you may find that you have more than $200,000 in gross receipts or more than $500,000 in assets. And that means that you'll have to file a Form 990. Keep in mind that you need to have more than $200,000 in gross receipts or $500,000 in assets. So if you have $100,000 in gross receipts and $600,000 in assets, you will have to file a Form 990. Now the final form is the 990PF, and it's for private foundations, so you all don't have to worry about that one. Now, I hope this was informative for you all, and if you have any more questions or would like to bring me back in for another consultation, don't hesitate to shoot me an email or give me a call. It was a pleasure working with you guys, and I hope to hear back from you. Here are my sources.